let's get more on what to expect from central banks this week. We're joined by ADRs CEO and Chief Investment Strategist, Eva Ados. Eva, great to have you with us. What are you watching today?
So what we are seeing is that, of course, the stimulus, there are two confounding effects. We think they're opposite effects. What we are expecting in the short term is that we're going to see a cash infusion in the markets coming from retail investors. So retail investors are now receiving their checks. As we saw last year, this time that coincided with a significant increase in the markets. So we think they're going to crowd the popular names. So we'll see the stock markets going up in the next few weeks, especially in tech, healthcare, and Chinese popular ADRs. But we have to remember that on the other side, with the stimulus, we have inflationary fears. And we know that institutional investors are hypersensitive to any modest increase in interest rates. And of course, with the stimulus now offering a cash infusion into the economy on top of an already recovering economy, that's going to add fuel into inflationary fears.
You say that tech will come roaring back. Is that from institutional investors? Is that from longer term investors? Because where does the retail kind of frenzy end, right? Particularly if you're linking it to the stimulus checks. Well, the $1,400, when that runs out, what happens? Do you still continue to see this, retail pressure on the markets?
So the argument here is that if we look at value, so our thesis is that a previous overreaction to growth shifted to an overreaction to value. And what we are seeing now is specific value stocks are now trading at an all-time high. If we look at Avis car rental, for example, it's trading at an all-time high, even though last year the revenue decreased by 40%. They have piles of debt, and they have competition with Uber, Lyft, and now with Zoom and business conferencing, since we're not going to, when it comes to business travel, we're not going back to pre-pandemic levels. Then when it comes to the hospitality industry, again, we have Marriott International, for example, trading at an all-time high, even though last year their revenues dropped by 50%. Most of the hotels, many of the hotels are closed, and they have competition with Airbnb and other players. So we think that there are no fundamentals to support the high valuations of some value stocks. And if growth stocks can drop 20, 30, or even 50%, like we saw in the past weeks, what can happen with value stocks is that they can drop up to 100% if they file for bankruptcy, like we saw with Hertz car rental back in the summer.
Does that mean that perhaps these financials are overbought at this point? Because we saw the KBW index gaining about 25% year to date already, and this coming at a time when, of course, yields are rising. So is that it? Do we have to veer away from these names that have, as you say, perhaps been too stretched? And where would you go then?
That's a great question. So what we see is with inflationary fears now, we have two areas that we're very focused on. One is fintech, and that's because traditionally financial services have been able to pass along their costs associated with interest rates increases by increasing their own rates. And when it comes to fintech in particular, they can increase their margins by leveraging technology and innovations to cut down costs and make their business models more efficient. Now, when it comes to healthcare, and in specific biotechnology, healthcare is also an industry that they can pass along their costs associated with interest rates rising. Because let's take, for example, insulin. Someone who needs insulin will buy no matter the price. So we have inelastic demand when it comes to healthcare. And when it comes to biotech, again, you have the play of technology and the leverage of entrepreneurial innovation, which can make your business models more efficient, your operations more cost efficient, and that will help you push the cost of related to the interest rates increase.
That also sounds to me like a play on demographics, perhaps. What are some of the thematic plays that you're putting into your portfolio?
So we are very focused on biotechnology, and particularly in genomics. So of course, the coronavirus pandemic put a spotlight on biotechnology, and we are seeing that the market size, the global market size when it comes to genomics is going to reach about $83 billion by 2027. And when it comes to the population, we now have aging population, especially in China, that puts extra pressure on coming up with new innovations. So we have seen already a tremendous shift out of traditional treatments and medicine into new age technologies that has pushed cost prices down. When it comes to, for example, sequencing a genome, we used to take 9 figures cost. Now that's hundreds of dollars. The amount of time for research has also dropped from 10 to 15 years. So we see great potential when it comes to genomic companies, and we have some in mind to share with you.
iShares CEO and Chief Investment Strategist Eva Ados there. We have lots more to come on Daybreak Asia. This is Bloomberg.